Bitcoin, it started out as this kind of secret handshake for a small group of coders and cryptographers. But today, it's a global asset. We're talking pension funds, your next door neighbor, everyone's in on it. So how on earth did we get here? Let's dig in and trace the incredible journey of who owns Bitcoin and why that journey really, really matters.
So let's start with right now. Who is the modern Bitcoin owner? Well, the answer isn't some simple profile. It's actually this complex, fascinating ecosystem, and it is way more diverse than you might think. Okay, so take a look at this breakdown. Regular people, individuals like you and me, we hold the biggest piece of the pie at 57%. But the part that just blows my mind is that massive 17.6% slice for lost coins. Think about that. Nearly a fifth of all the Bitcoin that will ever exist is just gone forever. It's like a digital ghost town, and it makes every remaining coin that much more valuable. And then you've got the institutions, governments, and yeah, even the untouched wallet of its mystery creator, Satoshi Nakamoto. But here's the thing. This whole diverse picture, it's brand new. To really understand who owns Bitcoin today, we have to rewind the clock. We need to go back to a time when this landscape looked, well, almost unrecognizable.
All right, let's start at the very beginning, back in what was basically the Wild West of Bitcoin. This was a time of pure experimentation. Honestly, holding Bitcoin back then was less of a financial play and more of a philosophical statement.
So the first block was mined in 2009, kicking off a revolution that nobody saw coming. A year later, we get the first real-world purchase, 2 pizzas for what is now a jaw-dropping 10,000 Bitcoin. Then in 2012, we had the first halving, this crucial built-in event that slashes the creation of new coins in half, guaranteeing scarcity. And as the first exchanges like Mt. Gox popped up, Bitcoin slowly started to step into the light. And get a load of this number. It really shows you how concentrated ownership was. By the end of 2012, a tiny group of whales, that's what we call people holding over 1,000 Bitcoin, they controlled almost 2/3 of the entire supply. It was a very, very exclusive club. So who were these people? Well, that first wave was driven by pure ideology. You had your cypherpunks, privacy advocates who saw crypto as a tool for social change, and of course, the miners who were securing the whole network. But right on their heels came the early speculators, who were drawn in by the first crazy price spikes and just a raw fascination with this wild new technology. But that little niche community, it was about to get a whole lot bigger. From 2017 to 2021, Bitcoin just exploded into the mainstream. And this is where the story gets really dramatic, because you have everyday investors and high finance colliding head-on. The entire reason for buying Bitcoin it completely changed. The why shifted from this philosophical ideal to a financial strategy. The whole story evolved into Bitcoin as digital gold, a way to hedge against inflation. I mean, institutions didn't care about some cypherpunk dream. They wanted portfolio diversification and, most importantly, a regulated, easy way to get in on the action. And the data shows this shift wasn't a trickle. It was a flood. I mean, look at a major exchange like Coinbase. Institutional trading volume just skyrocketed from under 20% to almost 70% in just 3 years. The big money had officially arrived and they were taking over. And this quote right here, it perfectly captures the herd mentality of big finance. It's not about one company making a move. It's about creating permission for everyone else to follow. Once a giant like BlackRock gives the nod, it suddenly looks kind of irresponsible for other money managers not to get involved. It's classic peer pressure, just playing out on a multi-trillion-dollar scale. And that brings us right up to today, the age of institutionalization. This is where we see the rise of these regulated financial products and a really fundamental, measurable shift in how people hold their Bitcoin. To really understand this new era, you've got to know one key term, the long-term holder, or LTH. Now, analysts define this as any Bitcoin that hasn't moved in at least 155 days. This isn't some trader trying to make a quick buck. This is an investor with real conviction, someone who's treating Bitcoin like a long-term savings account. And this chart shows you exactly what I'm talking about. The supply held by those long-term holders, it's sitting near an all-time high. Meanwhile, the supply held by short-term speculators is near an all-time low. This tells us the market is maturing. More and more investors are in it for the long haul. So, remember that staggering 62.7% whale concentration number from back in 2012? Well,
Check this out. Today, it's down to 34.4%. That is a massive shift. It's concrete proof that ownership has become way more spread out over the last decade.
So who's driving this new wave? Well, it's basically a who's who of the traditional financial system. We're talking massive asset managers, private banks, even pension funds. And their weapon of choice? The regulated spot ETF. That's the product that finally opens the floodgates for trillions of dollars to pour into Bitcoin with ease. But hey, it's not just the institutions. What about the individual American owner? Well, the data shows the majority are in their prime earning years, between 30 and 59. But here's where it gets really interesting. While guys tend to jump into crypto younger, the single largest group of female owners is actually in the 45 to 59 bracket. Maybe that suggests a more considered, long-term approach to their investment. Pretty cool. So, wow, we've gone from a handful of cypherpunks to the portfolios of actual pension funds. It's been an absolutely incredible journey. But what does it all mean? What's the so what here? What are the big takeaways from this transformation? Okay, if you only remember 3 things, make it these. First, ownership has undeniably spread out. It's not just for a tiny group anymore. Second, investor behavior has matured. The market has clearly shifted from short-term gambling to long-term saving or hodling. And third, Bitcoin is no longer some outsider. It is becoming deeply woven into the fabric of the global financial system. And all of this, it leaves us with one critical, lingering question. This journey to the mainstream, it's brought legitimacy and trillions in capital, for sure, but it's also brought in a new class of incredibly powerful players. So as these institutions become the new whales, we just have to ask, what happens to that original radical vision of Bitcoin as a tool for the people? That right there is the multi-trillion-dollar question that's going to define the next chapter of this incredible story.